Hey everyone, welcome back to Corporate Decoder, the place where we attempt to make sense of the money. Making world for you today, we are diving deep into a rather large report detailing the financial health and strategic direction of Spend Life Wisely Funds Investment Trust and its various funds from their latest filings. It looks like these funds have been navigating a pretty interesting market, and we are here to decode what it all means for investors. So grab your decoder rings and let's get started. Alright, so what exactly are we looking at here? This document is filed with the SEC, and it is essentially a certified shareholder report of registered investment companies, commonly known as a Form N. CSR, this tells us about the performance and financial state of a fund or a group of funds, like those managed by Spend Life Wisely funds. The period we are covering here is mostly for the fiscal year ending the 31st of July 2025. Let us dive straight into the performance of the funds. First up, we have the Ranger Small Cap Fund. This fund did not have a great year, returning negative 3.73%, which is a significant underperformance when you compare it to its benchmark, the Russell 2000 Growth Index, which actually posted a positive return of 3.15%. That is a pretty big gap, and the report mentions that weaker performance from several holdings and the pre-big. Balance of low-quality companies in the index were the main culprits. Looking at the long-term picture for the Ranger Small Cap Fund over 10 years, it returned 7.21%, which is almost on par with the Russell 2000 Growth Index at 7.28%. But that is a 10-year average and does tut quite smooth over the current year's underperformance, the ending value of a $250,000 investment. In the Ranger Small Cap Fund is $5,01357, while the same investment in the index would be worth $45,980, a difference of over $3,000 in favor of the index. Now for the Ranger Microcap Fund, things were even tougher. This fund returned a negative 7.48% for the year compared to a healthy 12.48% for the Russell Microcap Growth Index. That is a massive underperformance, and the report blames similar factors, weaker holdings, and the dominance of low-quality companies in the index. A $250,000 investment in this fund would have dwindled to $16,875 over its inception period, while the comparable index investment would have grown to $447,936. The Wisdom Short Duration Income Fund and the Wisdom Short Term Government Fund are newer, with operations starting in December 2024. The Wisdom Short Duration Income Fund saw costs of a hypothetical $10,000 investment at 1.28%, quite high for a short duration fund. Its performance is measured against the FTSE3 month Treasury Bill Index, and it seems to have held up well given its recent inception, earning 3.67% versus the index S2.74% ending value for a $100,000 investment is $103,672. The Wisdom Short-Term Government Fund has even lower costs, only 0.22% for a $10,000 investment, and it is also slightly trailing its benchmark, the FTSE1 month Treasury Bill Index, with a return of 2.57% versus the index S2.70% for a $250,000 investment. This translates to $256,432 for the fund and $256,744 for the index. Let us look at the top holdings to understand where the money is actually invested for the Ranger Small Cap Fund. Pegasystems, Incorporated, an enterprise software company, leads the pack at 4.82%, followed by Texas Roadhouse, Incorporated, a restaurant chain, at 4.3%. Opacent and Federal Signal Corporation, a safety and security equipment maker, at 4.00%. These top 10 holdings represent about 32.36% of the fund S-net assets. For the Ranger Microcap Fund, the top holdings are Kurasushi USA, Incorporated, a restaurant, at 4.72%, LeMaitre Vascular Incorporated, a medical device company, at 4.40%, and Iridium Corporation, a medical imaging company, at 4.38%. These holdings make up 37.81% of its net assets. The Wisdom Short Duration Income Fund has its top holding as Janus Henderson AAA ETF at 3.90%, followed by Eagle Funding Luxco Sal at 2.76%, and Simplified Treasury Option Income ETF at 2.66%. These top 10 make up a much smaller 20.87% of its net assets. For the Wisdom Short-Term Government Fund, its holdings are heavily concentrated in government-sponsored enterprise debt, with Fannie Mae discount notes at 20.57% and US Treasury bills at various maturities filling out the top spots. This fund is almost entirely invested in government and agency debt, making up 82.89% of its sector weighting. Now let's look at the overall size of these funds. As of the 31st of July 2025, the Ranger Small Cap Fund has net assets of $30 million. The Ranger Micro Cap Fund is much smaller at just over $10 million. The Wisdom Short Duration Income Fund is by far the largest with over $364 million in net assets, and the Wisdom Short Term Government Fund stands at over $52 million. One interesting detail is how these funds are divided by sector. For the Ranger Small Cap Fund, healthcare takes the largest slice at 22.22%, followed closely by industrials at 24.38%. Technology is also a significant portion at 15.08%. For the Ranger Micro Cap Fund, healthcare is dominant at 30.99%, with industrials at 16.55%. And financials at 10.71%, the Wisdom Short Duration Income Fund is heavily weighted in financials at 42.51%, and real estate at 13.97%, with energy and utilities also playing a role. Finally, for the Wisdom Short Term Government Fund, it is overwhelmingly focused on government and agency debt at 82.89%. Let's talk about the money these funds are making for their managers. The Ranger Small Cap Fund paid advisor fees of $184,685 net, meaning after some waivers, the Ranger Microcap Fund paid $29,291 in advisory fees, and the Wisdom Short Duration Income Fund paid $215,537 for its advice. So, Rye Services, the Wisdom Short Term Government Fund, had advisor fees reimbursed to the fund by an amount of $61,840. Which is interesting. The report also mentions expense limitation agreements for all funds where advisors have agreed to cap expenses to a certain percentage of net assets with the ability to recoup some waived expenses. If certain conditions are met in the future for the Ranger funds, they can recoup over $400,000 and $189,000 respectively, and for the Wisdom funds, they can recoup over $112,000 and $108,000. Regarding the audit of these financial statements, Cohen Footy Amp Company Ltd has issued their report. They found that the financial statements present fairly the financial position of each fund, which is what you want to see from an auditor. They have served as the fund's auditor since 2021. It is also worth noting that the fund group previously known as Ranger Funds Investment Trust has been renamed Spend Life Wisely Funds Investment Trust as of the 16th of October 2024. This is a rebranding effort to align with a new investment philosophy and management structure. The report also outlines several risks associated with investing in these funds. We have micro and small capitalization. Risk meaning smaller companies can be more volatile equity market risk, which is pretty straightforward. The stock market can go up and down. Liquidity risk, where it might be hard to sell certain investments, and derivatives risk for the short duration fund and government fund, which means using things like futures. Con. Contracts can introduce complex risks including leverage and counterparty risk. There is also asset-backed securities risk and mortgage-backed securities risk, which implies that loans within these securities could default or be paid off early, affecting returns. And finally, government securities risk, which applies to the short-term government fund, where even though they are government-backed, market value can still fluctuate. U8. It is important to note the operational risks involved. For example, the short duration fund may use futures and swaps to hedge against interest rate risk and foreign currency risk. This means that decisions made by the fund managers about these complex financial instruments can have a significant impact on the fund's performance and value. A significant event to note is that the Wisdom Short Duration Income Fund is planned to be converted into an exchange traded fund, or ETF, with a target date of the 6th of October 2025. This means it will become an exchange-traded product which offers different trading and structural characteristics compared to a traditional mutual fund. Now, for my take, these fiscal year results paint a mixed picture for Spend Life Wisely funds. The Ranger Small Cap and Micro Cap funds have significantly underperformed their benchmarks this year, which is a major red flag for investors in those strategies. The performance discussion points to issues with the quality of holdings and sector leadership, which suggests potential flaws in the investment selection process. However, the Wisdom Short Duration Income Fund and the Wisdom Short Term Government Fund are showing positive signs, especially considering their recent launch and competitive returns against benchmarks. The shift to an ETF for the Short Duration Fund is a strategic move that could potentially increase liquidity and accessibility for investors, despite the underperform. ANTS. In some areas, the overall management of the expense ratios and the stated focus on risk management in the shorter duration funds suggest a deliberate approach to capital preservation and income generation for those specific strategies. Looking ahead, the performance of the range of funds will be critical to watch if they cannot correct their underperformance relative to benchmarks. It may signal a need for a strategic review or a change in investment approach. The opportunities lie in the continued success of the newer wisdom funds and their potential conversion to ETFs, which could attract a new wave of investors, while the risks remain concentrated in the small and micro cap segments where market volatility and selection issues have already led to significant underperformance. Alright, that is our deep dive into the Spend Life Wisely funds. Investment trust filings, were these numbers what you expected, or do they raise more questions? Let me know your thoughts and questions in the comments below, and as always, if you found this breakdown valuable, smash that like button, subscribe for more insider looks into corporate filings, and make sure to join our Discord community via the link in the description. To continue the conversation, thanks for watching, and until next time, keep decoding the corporate world.